Equity Bank Group maintained steady growth to post 11.8 billion shillings pre-tax profit in the third quarter of the year ending September 2012. This was a 30% growth over the 9 billion shillings posted in a similar period last year. Announcing the results at the Equity Head Office in Nairobi, Group Managing Director Dr. James Mwangi said the impressive results were achieved despite challenging macroeconomic environment characterized by high inflation and high interest rates for the better part of the year.
We have sustained a growth rate on profitability of 30%, enhancing what we had in June. In June, we had a 29% growth rate. We have enhanced that to 30% over the last 3 months.
Dr. Mwangi said the bank will continue to focus on innovation to ensure financial services become fully and conveniently accessible and affordable.
We couldn't have had a better position in our business model. Why? Because the customer is very excited. He no longer needs to travel from his location to go to the bank because the shopkeeper next to his location or her location is a banker.
The CEO revealed that the number of depositors grew by 16% to 7.8 million customers. This growth was driven by agency banking and mobile banking. The number of the bank's agents grew to 5,500, reducing the cost of accessing banking services substantially while delivering enormous convenience to clients.
So we are on track to reach the 10,000 agents. And essentially, looking at the data that the central bank released yesterday, that by September, 144 billion shillings had moved through the agency, you find Equity has done more than 120 billion of the 144.
The group's capping of its lending interest rates to a maximum of 25% when the banking industry lending rates were above 30% helped to grow the loan book. As a result, interest income grew by 67% to 22.6 billion shillings, up from 13.5 billion shillings realized in a similar period last year.
NPLs have grown marginally from a gross of 3.5, 3.3 to 4%. The coverage to ensure there is no risk on that portfolio have moved from 39% to 79%, suggesting that anything that is in the NPLs at the gross level is well covered. And that 3% NPL ratio, we can see, and we're very excited, that after the spike in June to 3.2, by September, we have managed to contain that and we are back to 3, again reflecting the quality of the loan book.
The latest global credit rating report unveiled at the event indicated that Equity Bank has a very high credit quality.
Again, we have been rated top, Brad, in every aspect. And of course, we were very excited when Euromoney named as the best managed company in the finance and banking sector in the whole of Africa. Named the most sustainable bank in Africa and Middle East. And all that, Brad, is the greatest value of Africa.
Equity Bank's total assets grew by 19% to close at 232 billion shillings, up from 195 billion shillings. Going forward, Dr. Mwangi said the bank will focus more on supporting and lending small and medium-sized enterprises to enable them to take advantage of opportunities generated by implementation of Vision 2030 as well as high economic growth in the region.
And that gives the bank an opportunity to restructure its asset side, that we can now be able to create long-term loans of up to 20% of our total balance sheet. And that is immensely, people will start seeing Equity gearing and preparing itself to enter the SME sector in a big way.
Dr. Mwangi further said the outlook for the remainder of 2012 was positive as interest and inflation rates decreased, coupled with a stable foreign exchange environment.
Can Equity continue to grow the way it has been growing? The appropriate answer is that Equity can even grow faster now that it has innovated mechanisms delivery channels that are delivering convenience to the customer than before.